Hi, I'm Mike Hargis with the Hargis Family Agency, and I want to talk with you just a minute about some tips to think about when you're shopping for homeowners insurance. So in the Nashville area, homes fall in between the majority of time between $200,000 and $300,000. So for our example today, I'm going to show you what you would encounter most of the time when you're shopping for insurance on a $300,000 home. So a lot of insurance companies would suggest that you insure it for 80% of the total replacement cost, or in this case, $240,000. Half that amount would be added in for contents coverage, so another $120,000. You get loss of use for 2 years at 10% of the policy amount, which amounts to $48,000. So if your home were burned and you had to be out of it while it's being reconstructed, there'd be $48,000 for you to use while you're waiting for it to be rebuilt. The med pay of that would be about $10,000 on most typical policies, and the liability packages most often quoted by insurance companies is around $100,000. So if you paid every coverage in that policy all at the same time, the total value of that policy that I just illustrated there on a $300,000 house, it would pay out $518,000. And in this example, I'm using a $1,000 deductible. The premium on that package would be $1,200 a year or $100 a month. So for every dollar you're spending on this example, you're going to get $432 worth of coverage. Now let's look over here. If you quote it with $300,000 with many companies, you can get 100% of replacement costs plus an additional 20% that would be very important if you notice the Hurricane Harvey or the hurricane that hit Florida recently. All those prices go up in a major disaster. So you need some cushion on top. So they have a 20% extra, which means you'd have $360,000 up to that amount to rebuild your $300,000 house. Much better financial position. You'd get $180,000 on contents. That's 60% of 300. That's how I get that. Okay. $108,000 for loss of use, which is 3 years at 20% of the face amount of the policy, and then $10,000 for med pay, like the other policy I just illustrated. But we're going to bump the liability coverage up to $300,000 because you need the coverage and it's not very expensive to raise it. So the total in this package then would pay out almost $1 million, $958,000. And we bumped the deductible a little bit to save the premium to buy this additional coverage. And so the premium on this example would be $1,300, or each dollar would buy you $737 of coverage. So you're getting almost double the amount of insurance for about the same money. So this one is a much better buy to protect your most valuable asset, which is your homeowners. Thanks.